Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, and we're sitting here at the 28th of May, 2023, just after 4:30 p.m. Central Time. Well, the highlight of the day this morning was watching as Congress is drilling. It was the senators today really drilling the head of the FDIC, the head of the Fed, and other people that are coming before it, what's going on in the banking community. And the one thing that's very evident, and the blame is being thrown at, is terrible management of risk at SVB Bank. But then what about the other banks that have been in trouble? Are they all at risk? What about the stress test levels? How often should they be done? Where are we? Mr. Barr, who heads up bank supervision at the Fed, said a report is being done. We should see that come May 1st. That doesn't stop these hearings from going on. There'll be another round of them tomorrow from the House now, and they'll be asking a lot of key questions. So the good news is we're going to get to the bottom of what's going on. The bad news is mismanagement isn't something what we want to hear. The real bad news is it appears the Fed knew that it was being mismanaged and did nothing about it. Where's the teeth behind that? That's what I'd like to know. And what do you have to do to make changes so that when you tell these banks, hey, you've got a problem here, this is a ratio, whatever it is, too much, if you will, one-sided type of loan, too much deposits of one type, concern. I don't know enough about banking to tell you what should be done, but they do. And I'm talking they being the Fed, the Treasury, all the people that are looking at it. I think they need to fix something that is broken. That simple. Speaking of that, so now we get to the point where, because another shoe isn't dropping at this point in the banking, the market is starting to do what? Well, if you're looking, you're seeing bonds, notes in the 2 years and the 5s. They're starting to add premium back because the market sooner or later has to start looking and saying to itself, okay, while this issue was going on, we got convinced that the Fed wasn't going to fight inflation. But this issue is now come and gone for the moment. I don't know that there's not something else lurking out there, but trying to anticipate or say there is and it doesn't show up is foolish. You go back, and that's what the market's doing. It's putting back in normalcy to the market. And in that normalcy, what will start taking place is the Fed's action. And what is the Fed going to do? It's got to go back to the same game plan. It has to fight the 6% inflation. It can't beat it if jobs stay as strong as they have been. So the market's going to look at that. You're looking at home prices, and while the Case-Shiller 20 metro areas came in with a 0.5 point decline month over month, it was a 2.5% rise year over year. So, the big picture looks like that. We know the imbalance is out west where prices got too high in price, but I think Florida's getting too high personally. It's a runaway down there, and Florida real estate is notorious for peaks and valleys. How do I know? I participated. I waited. My wife wanted years ago for us to buy a place in Florida. I waited after a hurricane, saw property get smashed, saw the economies down there get hurt, and picked up property. And then later on, many years later, we sold that out as I discovered I was too old for South Beach. It's that simple. Do I love Florida? It's a great place to live, no question. This time I'd go to Miami, not the beach itself. There's different ways to live down there. It's beautiful, but everybody's doing it. And as they're moving from New York, as they're moving from other areas that like the tax situation and the climate, what happens is a lot of people chasing a small amount of homes that can be sold. And what does that do to price? I'm a trader. I know this game. You drive the price up to something that doesn't belong. The first hiccup down there, these prices come down hard. Florida real estate breaks real hard when it breaks, at least historically. And then you come in and that'll be your opportunity again. Just telling you the game as I understand it. Now, let me tell you something I want you to understand a lot. You want me to keep doing these, and I love doing them for you. It's a two-way street. I ask you to do a couple of things for me. Number one, if you like them, it costs nothing to click the thumbs up. Number two, tell friends to look at us. The more viewership we get, the better off we are. The more viewers, then the algorithms within YouTube and other communities do that. Okay? So Let's look at the S&P and get a feel for where we're at, because what I've told you is I now think we're through with the fear of the banking for the moment. You'd need another crisis to come about. I have no way of knowing if that's there, but I have no way of knowing that one will even show up. So where's the market fighting its battle? Have I not been telling you? I think the battleground's the 18-week average of closes. And the key is, are you going to get over that last rally high? So the last rally high we can go to see what it is. Maybe I should just put it on the chart so I don't have to do this each time. And that number is 40.4975. So the current pattern, at least, has been one of lower highs, lower lows, and the battleground pretty clear at the 39.90 level. When we look at the bar chart of a daily action, you can see how the distribution's going, but it's different because here it's the highs and lows, and they have higher lows, higher highs. That is bullish. Or is it? Let me step back because I said it and you probably didn't question it. I want you to question what I do here. Is it really that pattern? It's higher lows, but it's suddenly lower highs. Do you see that right through there? So that 40.3450 is well under the high up here. So now you've got a market narrowing in quite a bit. We have that in some of the metals going on as well. And the market's got to figure out from here what next is going to happen. Where are these battles going on? They're going on between the 100-day average, the 200-day average in gray, which is right next to the 18. And what I have been talking to in my morning subscriber videos, which I'd love for you to join me. It's like a club there. We talk a lot and get things done, and it's interesting. I get people writing me all day long that are my subscribers, asking me for help on their charts and formulas and things. I take a certain part of my day, I answer those questions, and away it goes. You're entitled to do that with it. Most people won't do it. A lot of people will write me, and if they got a question I can put on a chart, I create a 30 or 1 minute chart. I'm talking length of video, and I send it right out to them instead of writing them in a lengthy answer. It makes more sense. But you can see the battleground. Now, if you can get over 40.34.5, and I say that because you're over the 18-day average, so the bias is up, I then would say you can get a continuation of the rally. If the market from here doesn't take that out and gets under 39.37, then we get a really ugly picture to the downside, which could carry you to 38.79, the lower Bollinger Band. The Bollinger Bands for the moment, I think, are out of play. They're very far away on either side of the market, and that means the market's going to trade void of them most likely, and it'll use window envelopes for the support and resistance points. I don't show them on this chart. I show that in the morning charts that I'm asking you to join me with. Momentum up, bias up. The trend questionable because while I have the legacy of higher lows, I also just recently made a lower high. So is it a true uptrend? Well, lower high, higher lows is not a true uptrend. In the NASDAQ, you have a correction within a market that has a bullish bias. Now, why is this breaking? This is breaking because if we go back to normalcy, it means the interest rates are going to climb again because the Fed, contrary to what your friendly broker is saying, is not going to cut them at any time soon and may actually raise them again in May. May 3rd is the next FOMC meeting. That weighs on these markets. Part of what made this market rally, in looking back, was that as the banking crisis unfolded, traders instantly said, that stops the Fed from doing anything, forces their hand, and you had a bunch of people coming out that I was reading, and they're going, oh, come June, they're going to have to cut interest rates. Nonsense. Nonsense. Prove to me that the banking crisis is systematic. A few banks concentrated in certain areas of the market, not the big boys, obviously regional. That's not systematic. There may be more of them out there, but that doesn't mean it's systematic. Therefore, what gets hurt if interest rates go up are certainly utility stocks and tech stocks that rely heavily on being able to borrow at their bank. They have a problem regardless. That friendly See the smile? That friendly banker? What do you need the money for? You don't need the money. That's what you're going to run into. Because bank upon bank upon bank, for the moment, is going to tighten up. They have to. They know the regulators are looking everywhere. If you're on the cusp of, should I give you the loan, shouldn't I, then they can't do it. If you're a great client, you're going to get that loan. So it depends where you're at, what it is. And even the great clients may find that the bank says, maybe we cut the amounts down a little bit. Maybe that $500 million line of credit, I know that you're always said, maybe we take it on our books down that it'll be $400 million if you have to draw against it. You got what I'm saying? That conversation is going to happen if it's not already. In the Dow, we have higher lows, higher highs, and notice how the market's just hanging right here. It closed today 32,588, 32,604 is the 18-day average of closes. Got to wait and just see what it's going to do one way or the other. But this is the battleground for it. I look for resistance. If it can continue its trend up all the way up here, can it get that high in a rising interest rate environment becomes my key question. In the Russell, I have a market under the 18-day average, so you have an immediate bearish bias. Higher lows, higher highs, bearish bias, and oversold. Chart's a mess to me. In the T-bond market, the market had this big rally via the banking crisis, and now it's trying to work its way down back to the 18-day average or lower. The trend is down, but the bias is up since you're over the 18-day average. You were overbought, and momentum is turning down on you. Again, I don't see anything that's easy to trade off of there. And in the 5-year note, you're getting right to the point where the 18-day average might crisscross the 100 tomorrow. I don't know if it will or won't, but momentum is turning down. You have a higher high and lower low. It's really not a trend basis. And if you want to make life easy, you break hard in this market, you get under that 108 number, and you got a problem on the chart. In the dollar index, the trend is down. Lower highs, lower lows, but oversold. Oversold money, the way I teach charting, doesn't attract new money. Embedded money does. Embedded occurs when the slow stochastics get over 80, both numbers, and stay there, or underneath 20 and stay there, and you can see prices typically go down with that. You're not at that point in the chart. In the eurocurrency, it's sort of the flip-flop, and you're overbought. I view any readings that aren't going sideways over 80 and either one number or two numbers over 70, they're overbought. So I have a trend up, a bias up, but an overbought market typically doesn't attract at least me into telling my clients to buy more. The pound, yes, bullish, embedded, up. You've got the swing line up, you got the bias up, you got the embedded reading. Everything's pointing to higher prices on the chart until you lose the red line by it closing under 79. In Bitcoin, we have a corrective phase, possibly. First, you have an embedded reading. Keeps me away from wanting to be short. I'd only be using breaks to buy until you get the red line to close under 79. You're in a bull market because the bias is up and you have a bear correction going on within it. Got it? But I think the pros are buying this correction until the embedded reading is lost. In Brent versus WTI, Joe, you blew it. Look at what energy prices have done. I was so proud of our president when Brent was falling down here and when WTI was. I'll show it to you in a minute. Now you're at the resistance point. Part of this has to do with what's going on in Turkey and Iraq. It appears that, there's a government within Iraq that's located in Baghdad, and in the northern province, I think it's the KRI or KRG, they control that area. Well, to make a long story short, there's been an argument over an agreement with Turkey on using a pipeline. And it began in, from what I understand, 2014, 2012, right in that area. Part of it got resolved, and I didn't know about it till today. I read a Reuters article on it. And it stops the KRG, I hope I'm using the name right, from shipping 450,000 barrels a day of oil. And Turkey has to give back money to the Baghdad, the Iraq government there, of $1.4 billion. I mean, so not a little bit of money we're talking about. So now what do you do with that landlocked oil? How do you get it out of that northern region? So the two governments that don't see eye to eye within Iraq have to get together and see if they can work something out. You know, if you're going to landlock the oil, the next step will be a war. You don't want to do that. So I have one word that always works in a case like this: royalties. Better to get something than nothing. Royalties. That works real well. Think about it. And so that oil that's off the market, I don't think it's permanently off the market. We'll see what goes on. You can see how the market's going to fight here at that particular number. Joe. Here's the 64. Our president in October assured us that he had his energy administration ready to buy oil from $70 on down. You haven't heard one word from our president since then on the subject matter. He sent out the head of the energy, though, and she said, no, they were never equipped to do that. They have maintenance ongoing, and they don't even see 2023 as being a possibility. But of course, in front of an election, you say these things, right? But where's the honesty? Where's the, hey, there's a problem here, America? He likes to come out and tell us all the things. Be completely truthful, all right? To me, it's important because it's called a strategic oil reserve. It is not just oil. It is strategic oil. We need it. God forbid something in the world happens. And don't tell me it doesn't happen. We saw it in Europe with Russia. We need that oil back in there. We don't need him to decide we don't need it. Congress, make him do it. In Rebob gasoline, higher lows, higher highs. I told you yesterday, and I'll stick with it. I think the market is now pricing in the spring-summer move. I was hoping it would have been, frankly, I was hoping it was going to be back here when we were talking. Remember, I did my special report in February on this. Market came down and went a little lower than I expected it to, but so what? I wasn't buying it at that point or telling anyone to anyways. I actually have begun telling that to my subscribers, but I'm not going to tell you where, how, or what I'm telling them. In natural gas, what have I said all the way through? This is that funny time of the year. You're neither super cold nor super warm in most of America, but you're not going to be burning through because it's not super cold. A lot of that gas, so it builds right now, and that's driving the price down. However, it is a very orderly break. It acts to me like a break that's being forced to the downside. It is embedded. Don't ever try to pick a bottom on an embedded one. You want to sell into it and eventually lose because you sold it one last time too many. That's all. But that's how I teach working with those. As you can see, the boards behind me, they're all empty now because we're just minutes away from the 5 o'clock reopening. Want to remind you, learn Bollinger Bands. Learn the enhanced part of the slow stochastic. I teach you how to put this together in my enhanced Bollinger Band course. How do you do this? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.